Okay, hello traders. Today is Tuesday, August 2nd. Michael Boutros here with you for this intraday strategy webinar on SB Trade Desk. Guys, we just got the release of some U.S. economic data, personal income coming in slightly weaker than expected, spending slightly higher, real spending slightly higher, slight downward revision to the previous print. So mixed batch of data here for today's U.S. data stream. Dollar obviously still on a very heavy footing to start off the session. And we'll go over those metrics in just a moment. Just wanted to get this data out to you as soon as possible. Good morning to everyone here in the room. Madad, Graham, Francis, Mark, Pooja, Raymond, Ruth, Stephen, Tiffany. We got the whole crew here today. Good to be with you guys. Eileen. Good morning, Mike. Glad you're here. Should have jumped back into the Sterling half an hour ago. Love my chasing. Not always. And you guys, though I'm not cured of the chasing, have really helped my discipline. Well, cheers on that, Eileen. Yeah, we definitely don't want to catch some of these, or if you missed entry on some of these moves, specifically with the update last night we had on Sterling, Aussie, both, taking out those topside targets as expected. Adam, good morning to you as well. Amir says hello to everyone in the room. Francis says, great Aussie call. Cheers, Francis. Again, it's not my levels, man. It's the market that's giving it to us. So good morning to you as well. So let's jump right in. So the data stream for today, you still do have ISM New York, which comes out shortly after the close of the webinar at 9:45. Not going to be a major market mover. Next data print of consequence really is tomorrow morning, and that's going to be the ADP employment change. Now, a lot of people, and I say this every month, but a lot of people continue to use ADP as a gauge for NFPs. They broadly will move together, although ADP is largely known to miss those larger spikes in the more encompassing non-farm payroll report. So keep that in mind as we head into tomorrow morning's session. That's going to be 8:15, guys, right ahead of the open, right ahead of the start of this webinar. So do keep that in mind for U.S. data. If you can go through sterling yen, want to know what's the support at this level. Amir, will do, including fibs. I got you. Let me write that down. Pound yen. So that's for tomorrow. Looking at the U.S. looking at the U.S. session so far, here's what the performance looks like. The dollar is weaker against all of its major counterparts. Obviously, our favored move last night, the Aussie, biggest gainer on the session, up 1%. And that's interesting, right? Because the Aussie's up despite the fact that they cut interest rates. And we'll go over all that in just a moment. Okay, so let's jump right into the price action for the dollar index. Here's what the index looks like so far. So we've been following this chart, if you guys remember, for the last couple of weeks. If you go to the radar chart, the latest radar charts, it's the highlighted chart still. By the way, the radar charts will only be updated when there's a need to. So we're still following the same exact setup. We broke that key support last week. Here's where we're sitting yesterday. We just took out the 200-day moving average and subsequent support lower down to the 50% retracement of the post-Brexit rally. That basically takes you into 11,901, excuse me. A little bit lower from where we are right now. So keep in mind this is an outside day candle so far. These at the lows can sometimes offer or suggest exhaustion. So a little bit cautious of a snapback here for the dollar, but broadly still looking lower. Key support is going to be down here, 11,850. And that's the 618 retracement of the advance, the lower median line parallel for the current operative structure, and basic trendline resistance, turn support. All coincide down here, 11,850. Okay, so at this point, I'll still favor the short side while below today's high, essentially, which is going to be the opening range high for the week, with a break above essentially last week's open, 11,997, or last month's open, really required to invalidate the short side. That would take you back above the 50 line. But all things held constant, still looking lower here in the dollar index. Any questions on the greenback before we move off? Even from a near-term prospect, here's what it looked like yesterday. We were talking about these near-term levels. A little bit late on the timing, but we did rally into that 236, came back, and now we're breaking back below former channel resistance, turn support, breaking back below it again. 50% retracements right there, 11,901. Any questions on the dollar index? Really not much to update on that front. All right, let's jump into the juicy stuff. Here's what Aussie dollar looked like, and we'll take a minute and we'll go over some of the commentary that came over from the RBA last night. You know, really interesting commentary. Our major premise for the Aussie was basically just on the basis of the technicals. And I tried to instill this yesterday as I was writing that report, saying, look, at the end of the day, either way, whether they decide to cut or not, we'll be looking for support into that 74.85, 74.90 level. Now, you kind of shot through it by a little bit, but again, these interest rate decisions can really charge some intraday volatility. Francis, your question here, I'm not sure what you mean. What's the new oh, for the dollar index? I'm sorry about that. He's asking what's the invalidation level. For the short side, I'd like to stay that below today's high that we made an overnight trade. So let's call it 11,982. That's where I'd like to stay short below. Bearish invalidation, or what would shift us to the bullish side, Francis, would be a break above last month's open, 11,997. Does that make sense? He says, okay, right on. US dollar index, we are now at major support. Not yet, Mir. We're at the 100-day moving average, which, here's the thing with moving averages, guys. I'm not a big moving average player. If you're someone who likes using moving average crossovers, I just feel like it's a very delayed way to trade. The only way I look at moving averages is as support and resistance on the longer term. Your 200-day, your 100-day, your 52-week, your 13-week, which is essentially a quarter. These are moving averages I'll pay attention to. So yes, you are at a near-term support, but I wouldn't call this now at major support mirror. If anything, I would be a little bit more inclined to use the 50% retracement as that. Could get a little bit of a bounce here, but you know, this is not going to be a major support as far as I'm concerned. Another thing I just want to note is look back in price action. Never take a moving average as a staple of it's automatically going to be support or resistance. And if we take a look back at the 100-day, you can see that in fact it's offered some really nice resistance. Not so much resistance or support, but a nice pivot in price here, here. So yeah, could get a little bounce off this region. Broadly, still looking lower. Now remember, one other thing I just want to keep in note, guys, is this. We're still putting in the monthly opening ranges. We are ahead of major event risk on Friday with non-farm payrolls. So don't expect these breakouts to really run, you know what I mean, ahead of these major decisions. So I wouldn't be surprised if we kind of hold this range near term before making a bigger break towards the end of the week. Mir, does that make sense? I would say near-term support. Wouldn't say major support. This is what I would dictate as like significant major technical support, because it's the confluence. Remember, the more evidence you have to support your thesis, the better off you'll be. He says, yes, thanks. You're more than welcome. Okay, got all those questions. Awesome. So back to the Aussie. Here, my friends, is what Aussie dollar looks like first on the daily chart. And again, here's what we looked like last night. So we wanted to stay constructive above this confluence here. This is another example, Mir, right along with what we were talking about. Here you have the 200-day moving average alongside basic trendline support and alongside the 50 line of the current operative slope that we've been working with off the low here. You see that? All of that converged right there. So that was an easy call. You know, as long as it stays above that region, especially heading into the RBA, look, we never know what's going to happen, right? But we have our levels mapped out, which is why always at SB we're always talking about, we're stressing price action in and of itself. You know, I'm sure there was a ton of people yesterday that all started shorting the Aussie. Oh, they cut rates. That's bad for the Aussie. Well, the technical said as long as you hold above 75 or 74.90, 74.85, you still want to stay constructive, right? So as far as some of the commentary is concerned, just to walk you through, obviously they cut interest rates by 25 basis points. That takes Canada. RBA. That takes Australia into record low interest rates for the country. Some highlights that, you know, the Bloomberg Terminal and some of the other news publications followed was the fact that they said that the prospects for CPI returning to target improved with this cut. Interestingly enough, they also made some comments about housing. Inflation remaining quite low for some time. Says overall growth continuing at a moderate pace. Where was it? RBA says lenders taking more cautious attitude in some segments. And again, they've been talking about this housing issue over in Australia as well. Long story short, guys, at the end of the day, it was a more dovish tone, but it doesn't really suggest that we have sort of an expectation for further cuts yet. Here's what the Australia overnight index swaps look. So they cut, right? Well, this hasn't been updated yet, so we'll have to see what this looks like tomorrow. But they cut interest rates by 25 basis points. At the end of the day, Aussie saw a big tank. And here's what the intraday chart looked like in comparison to last night. Okay, so we were trading right against this region. You saw it turn higher, and then obviously RBA came out, slammed lower right into the lower parallel. Okay, overshot. I think we named 74.85 into 90. The low is 74.80. And then a quick rebound took us right higher. Notice a few things. Ahead of the release, I kind of highlighted this for you on the report, that we had some divergence into the lows. Now, it didn't warrant long exposure because of the timing. You were just ahead of the RBA. You weren't exactly at support yet. And although you got a trigger in momentum, you want to be cautious about trying to chase these trades ahead of the release. So the drop down into structural support, as we noted, was the ideal approach. We've already taken out topside targets at 75.50, 75.70, the weekly and monthly open at 75.90, now testing that 764 retracement at 76.15, way up here. So from here, keep in mind, again, a couple of things. This is not only a basic Fibonacci retracement, but it's also now the opening range high for the week and for the month. So sure, heading into the U.S. session could get some kickback from here. You do want to see a constructive play and you remain bullish well above this region here. Okay, former support that we opened up the week at, that's what we want to look for as near-term resistance, or former resistance, now near-term support, right along that 50 line. So again, giving added credence to this formation with all the pivots that we've seen, turns ahead of the upper parallel, turn at the lower parallel, continues to put added emphasis on this structural formation off the lows. Where do you think the pullback might come for another long entry for the Aussie? Ideally, Eileen, is right here. I mean, here's the thing. I don't know if you're going to get a pullback to that magnitude, another 50 pips move to the downside. That would be my ideal play. I'm not going to go chasing this. Next topside objective beyond here, guys, is up here. And this is a 100% extension, longer dated. Let me show you what that looks like. That's this. Okay, this is the daily chart. So 100% extension off the advance from the lows that you set forth in May. That subsequent high in early June, the June subsequent low on the 16th. You can see that we caught that high right on for the month. That's your next topside objective, and it coincides near term with that upper parallel. Eileen said, yeah, it's at its stretch high quite far already, yeah. I mean, again, on a move like this, guys, where you see a massive outside day reverse like this, it's just good to be cautious. If you didn't catch the entry, I would be looking, again, near term for exhaustion up here. Or if this holds into the U.S. Open, again, weekly opening range high, look for the pullback to offer some support here. One other thing you can do, Eileen, is on the U.S. Open, if we start to see this thing turn over, near-term price action starts to get heavy, just tack on a quick retracement. Now, I don't want to do this now because I have no way of substantiating this is a high. But in such a scenario, interestingly enough, you could see the weekly open comes just above that 236, 75.85. And that's the high day close at 75, 75, 75, 71. Yeah, so I'd still want to look for this region, Eileen, right here. If we can get a kickback in Aussie dollar. Keep in mind for the Aussie, the stakes are still high heading into the end of the week, especially with ADP tomorrow and also for non-farm payrolls on Friday. Yep, Eileen, you got it. We'll go over sterling in a moment. Yeah, same boat though. Same boat. Any questions on the Aussie? Beautiful play last night. Continue to favor the upside. We're at near-term resistance. Look for support near 75.71, 75.75. Inevitably looking for that stretch into confluence resistance just above 76.44. Again, feel free to take a snapshot of the screen, guys, if you need it, but these are the same levels that were presented on last night's piece. Okay, so that is Aussie dollar on the heels of the RBA interest rate cut. Again, taking the Aussie into, or taking rates into a record low. As far as Aussie data is concerned, aside from U.S. data, which is the NFP print, obviously, and the ADP print, you do have retail sales heading into Thursday as well. Or, I'm sorry, that's tomorrow night here in the U.S., so keep that in mind for Australia. Looks like we're going to make that push in early U.S. trade before the open, maybe even. Okay, let's move on to British pound. That was the other one from last night. Here's what sterling looks like right now. Let's focus on the near term. Daily still pretty ugly. And here's what sterling looked like last night. So, for the British pound, the premise of this trade was that you were coming into some basic structural support. We talked about this yesterday in the webinar on Daily FX. 131.66, interestingly enough, I mapped this out yesterday, actually ended up being an exact 100% extension from the highs. So the fact that we've made that sort of begs a ABC simple correction within the encompassing larger advance here. When these things happen, it's important to pay attention. That's all I got to say. Especially the fact that the sliding parallel that we added yesterday in the webinar continued to hold price. We did get a couple of slips below, but even on a 30-minute, we could not break that on a closed basis. And that's something important. I always pay attention to these. Because, by the way, the 30-minute closes are also going to show you the hourly closes, right? And those are the main things you want to pay attention to as a break of support or resistance, is an hourly close above or below that region. So still like in the pound, not much of a change for the outlook there. Pooja, great to see you, says, hey, Mike, I'm holding sterling long from 132.05. Very nice. Trendline at 133.05, stop at 132.18, levels beyond 133.15. So if we get through 133.15, I don't have anything till 33.90. Well, let me adjust that. Let me bring this into a 764 just to be safe. I think that'll work a little better with slope and time. Not by much, but these are sort of the top side levels I'd be looking at for the pound from a scalping perspective. So I have a soft target here at the highs that you made. If I can snap it. The highs that you made back here in July, on July 12th. So I would use that as a soft target, Pooja, 133.38. But largely speaking, this would be the larger, more important resistance range. Keep in mind the daily chart. Okay, that's a big region. We haven't been able to really close above that since essentially the Brexit lows. So if we do mount an assault above 33.19, that high, 34.70, would still even overshoot that first 764 retracement. All right, and I would just say this. Pooja, you got a great entry on that. So, this is sort of a big range here. And if it does clear it to the upside, this thing probably has some legs. Sterling, I have a 1618 at 133.33. Excellent. So basically looking at that same high. But what, I think you're using this extension, aren't you? Well, actually, that's one that we should have on there anyway. An extension right off the low gives you a 618 at 134.80. Still well outside the target for that 33 or that 33.80 level. From the high low on 715. 715. I see what you're talking about. Sure. Yeah. Either way, we're deriving the same levels. 133.38. That high, you have it at 133.36 and 33.80. Both levels of interest. Right now, as we speak, heading into the U.S. session, though, I do want to just bring up that median line. I know that we're kind of spiking through it now, but on these types of formations, obviously you've seen the median line be compromised a couple of times before turning, so I wouldn't go chasing yet. Pooja, you're already holding the position, so I think you're in good shape. For re-entry, I'd be looking for a move back towards the median line if possible, keeping in mind that the weekly open comes in right here at 32.38. So maybe a move back into like this region would give us opportunity to get back on the long side, targeting that 618. Not bad. Not bad. And swing trades obviously are still in this one. No change. Any questions on the British pound before moving forward? Hey, you're more than welcome, Pooja. Mir says, when U.S. dollar strength comes, would you match it with sterling for an extended move lower? When U.S. dollar strength comes, for me, Mir, I actually would rather play that towards dollar CAD. That's just my humble opinion. The pound, I think, is just, I don't know. I just feel like everyone's too bearish on it. And anyone who's been too bearish on it hasn't been having a very good couple of months, right? So I don't know if I'd want to play this one per se. Don't get me wrong, Mir. You're likely to get some serious downside if the dollar does give us a rebound. But my preferred play for dollar strength would still be dollar CAD. Does that make sense? Or for now, at least. Okay, so all the topside targets, or essentially the first initial topside targets, have been hit for the sterling, looking to remain higher above the weekly open. For a bullish invalidation level, I would actually set that down here, as long as we stay above that sliding parallel that we held all day yesterday. So that's like 32 handle. Yes, Ruth. Let me ask you this, Ruth. Are you waiting for? Are you talking about to get back on the long side? Yes. Yeah, I would be waiting for it, 100%. Graham says, what's WIRP for sterling? No problem. We can certainly take a look, buddy. By the way, for those of you who don't know what that means, it's just world rate probabilities, world interest rate probabilities. For pound, looks like this: 97%. 97%. And Graham, this is why I can't even stress it enough, guys. This is why even more so, it's going to be something very similar to what we saw, in my humble opinion, to the RBA. Why? Because markets are already anticipating this cut. They've all but priced it in. 97.8. Even if they cut rates, sure, you're likely to get maybe a spill in the sterling, but by no means would that suggest to me a longer-term bearish trajectory. It's priced in. Okay, it's priced in. And in fact, one other screen that we like to look at a lot are Credit Suisse overnight swaps. And if we take a look at the global summary, you can actually see how many additional basis points in cuts they're expecting. So if you look at the UK, looks like we have they're only pricing in a 22% probability of an additional or a cut this week. But this is what I look at. Number of basis points expected to be cut over or hiked over the next 12 months. And this is still at 34 basis points. So if we do that, and then you take a look back to WIRP, you can see that, well, that's pretty much priced in. Pretty much priced in. We have over 90% heading all the way into September of next year. Now, obviously, they're not going to cut every time, but you get the picture, right? That markets are really bearish or dovish on monetary policy as it stands. So that expectation isn't necessarily going to translate into price. And if you're looking at the rally here, this might seem confusing. Well, it doesn't make sense. Well, this has been at these levels for some time. And in fact, people were expecting that the BOE might look to cut last month even, right? So I hope that helps. And Graham, again, feel free to take a snapshot of that if you want it for future reference. Ruth, to what level would you wait? Oh, for the pullback here. So here's the thing. I would be waiting for the monthly open, weekly open. That would be my initial area of which I would start to look for possible reentry. But ideally, you look for a rebound off of one of these median lines. Okay, just basic median line analysis, guys. When you rebound off the upper median line, you look for a rebound off the lower median line. When you rebound at the 50 line, same thing. You actually look for the stretch right back to the lower parallels. So from here, if we pull back, yeah, I'd be looking for entry around the open, around that lower parallel, 32, 32.30 would be first areas I'd be looking for support. Break higher, 33.18, 33.33, and 33.80. Now, Ruth, just to put things on the record, this might not pull back. If it just rallies through, what's the plan? What's the game plan? There is none. We're not going to chase. I can never advocate chasing a trade. So even if that does happen, I was talking to Eileen about this earlier in the session before we opened up, the market will always provide more opportunities, guys. The worst thing you could do is just start jumping into a trade because you're missing the move. I'd rather miss it, sit on my hands, do whatever you need to do to stop yourself, wait for the proper reentry so you have that proper risk to reward, and move forward. Ruth, does that help? Does that make sense? Eileen's saying definitely never start chasing early on. Very hard to later break the habit. Yeah, it's a classic mistake. Classic mistake, especially near-term trading. You get caught up in the moment. Either way, British pound. And does not work, right? Yeah. The worst thing that happens is actually if some people start chasing and it does work for a little bit, then it becomes a serious habit to break. Tell you, chasing markets is worse than stopping smoking cigarettes. It's a hard thing to do. All right. Ruth, you're more than welcome. I appreciate that. Moving right along for last night's update, I do want to take a moment and talk about EuroCAD. This is still not a play for me just yet. I wanted to highlight the levels that we put together in the webinar yesterday. But before we do, I want to go over Aussie Kiwi. Another one that saw a big spike to the downside before moving higher. It went through a key support region. And for me, again, I wasn't here to play this one live, but the break back above 44.87, 44.95 would have been the trigger in price and momentum. Okay, just to put things in perspective, here's the daily chart. Big confluence support. Now I can't stress these enough. This 1618 extension off the high, 618 retracement off the low. Median line, this is an adjusted slope for what we were looking at last week. Coming right into play right there. And then last month's open was literally the low that we spiked into before we rebounded higher. Okay, This is constructive to me, in my humble opinion. Now, immediately, you are coming in some resistance, okay? You have the January lows from earlier in the year. You have that 50% retracement. That gives you 104.17 into 104.39. I'm sorry, 105.41, wow, into 105.39. This region right here as near-term resistance. You stay constructive, again, above that same support zone, even though we spiked through it. As long as we're above 104.87, 104.94, I want to stay constructive here on Aussie Key. You guys have all seen this chart before with the slopes that we've been working with. Shouldn't be surprised that we saw that turn. And we were talking about this in the intraday charts last week. That same slope off the 2014 low has continued to define so many turns in price. It's not even funny. So the pullback here keeps us constructive near term while above that 104.94 level. Here's what the intraday chart looks like for Aussie Key. And here's what we looked like last night. The daily chart, again, we were highlighting that key region of support. Spike lower into the open from last month, moved higher. Here's what the intraday chart looks like. Okay, so we're just coming up on that initial July opening range high, 105.50, excuse me, which is going to be pretty darn close to the weekly opening range highs here for Aussie Kiwi, 105.50 on the upside. That also converges on that 50 line heading into the U.S. Open here. So what's the game plan from here, Mike? Well, I'd be looking for constructive price action to really start to mount so I can take a long. I would look for a stretch here, possibly a pullback into this key zone to get back on the long side. If it breaks, again, look for a move back into the 50 line to get long before a move higher. Bottom line is this is a key barrier. And even if you look in price, there's been a pretty decent pivot along this zone between 104.87 and 104.95. So no change to any of those levels, still looking higher above 104.87. Any questions on Aussie Kiwi? Okay. Next up on tap is, let's jump into the Euro Dollar, and then we'll check on Euro Dollar CAD, and then we'll jump into Euro CAD. So first up is Euro Dollar. Here's what it looks like. I didn't put an update because there was really no change needed. I did just link the previous chart. So here's what we were looking at the previous day for the Euro. The levels, well, yesterday we kind of did a whole lot of nothing, just straddling the weekly open here. This is the break that has me focusing higher near term. Now, that was the July opening range high, 111.86, now near-term support, okay? And why this is significant is because if this is a break of the 50 line here for the broader structure, it should really offer some support. And we're seeing some initial support here on the rebound, but still think you can possibly see a move higher. Long story short, 112.28, 112.31, major key resistance. Again, nice 618 extension from the advance off the Brexit low. 618 retracement from the decline off the Brexit high. Median line for the current operative structure off the lows. Boom, boom, boom. Coincides. We rebounded off that last week. Coincides right along that Fibonacci confluence heading into the close of U.S. trade today. Okay. From a trading standpoint, I don't really have, how do I say this in a more proper way? From a trading standpoint, trading or getting into the long side of this trade is very hairy at this point. I mean, from a scalping standpoint, if you do want to try to take some long exposure on a pullback to that median line, sure, I'd be trading quarter leverage, really light, guys, specifically with all the event risk that we have on tap. You're trading at a multi-week high. It's not, going to be the best idea for you to start aggressively pressing the longs here. The trade remains constructive, but I'd be looking for a little bit more of a pullback here before I start chasing the long side at this point. Would you explain that concept about hitting the 50% level and then waiting for a bounce back. Not sure I understand the concept. Give me an example, Ruth. Was there one that I reviewed today that threw you off? Or give me a pair to talk about. Mir, I wouldn't say that. Ruth says with the pound. Okay, guys, I'll come back to the euro if you have any questions, but I do want to answer this for Ruth. Mir, I wouldn't necessarily say the big picture for Aussie Kiwi is bearish, my friend. In fact, um, again, I'll come back to the pound, but in fact, Aussie Kiwi, I'm working under the assumption that may have put in a significant like yearly low. Okay, that's just my humble opinion. But you know, the technical significance of the levels that we've turned at and slope analysis both have us looking broadly higher moving forward. And I think that kind of fits in with what we're seeing in monetary policy as well. Keep in mind those New Zealand auction prices actually I think are out today, those dairy auctions. So Mir, that's what I would say as far as Aussie Key. Ruth, on the pound, let's go back to that 30-minute. Right. So this is just the median line, right? This is basically this pitchfork off the low. Here's the 50 line or the median line, right? If you see resistance here, your inevitable or basic median line analysis calls for this Ruth to come right back to median line support before moving higher. If we break through this, you look for channel resistance to hold. Your downside target from a rebound from there would be the 50 line, right? You're basically just looking to play these expanses or these ranges, let's call them. So here, for example, you got a rebound off the lower parallel. You broke through the 50 line or the median line rather. Your initial target is that top side channel resistance. On a rebound or pull down lower, your initial target would be the median line. On a break below the median line, your initial target is the lower parallel. On the rebound off the lower parallel, your target is the median line. You see how this pans out? So from here, you could get a pullback. You'd look for support at the median line support. On a rebound from there, initial targets would be right back at the median line, backed by the upper channel. Make sense? Ruth says, okay, yes, right on. Right on. Cool. AMD says, my issue with Sterling and Aussie is the data as I explained it to you yesterday. I'm using TradeStation for analysis, and their data is different. So for Aussie, are you talking about Trading Station with FXCM AMD or using TradeStation? It might be off by a couple of, no, TradeStation. Yeah. I do have a TradeStation account, although I don't really actively use it for FX so much. But yeah, they shouldn't be off by too much, AMD. The IDC feed I use for Sterling is going to have different opening and closing prices. But Aussie should be broadly the same. I use it for analysis. It is. Okay. Okay. Yeah, I mean, it's actually a superior platform as far as charting is concerned, AMD. But 3-pip fixed on FX at this point. And I don't want to talk, I'm not talking smack about TradeStation. I'm just saying it was a little too rich for my blood, especially someone who's scalping all day like me. A 3-pip fixed spread is, that hurts. Okay, so any questions on the pound, Aussie dollar, euro dollar? Again, just to touch on euro, still looking higher. I want to see a snapback. I'll look for some resistance near term near 112.28, 112.30. But according to plan, still right in line with our outlook. Here's what the daily chart, by the way, looks like for euro. So tough, or it's been hard trying to get in ever since the break last month, but still looking higher. Again, coming in some near-term resistance here. All right, dollar CAD, and then we'll jump to some of your questions. AMD, I see your question there on euro, euro pound. Haven't looked at it, but we can definitely take a look. Okay, dollar CAD looks like this. So we're kind of coming right back into a major key support zone. I think the risk is for a move lower here before we rally. So I would be looking for this, excuse me, for this correction off the high to find a new low for us to get back on the long side, excuse me, while within the confines of this ascending formation. So you can see this was a huge, huge level of resistance that we talked about for, seems like forever, but it was basically 2 months. This was an exact 1618 extension off the high, which capped the advance last in June, and the high day close that we made back in May, continuing to offer resistance all through June, all through July, till we got that break on July 22nd, ran right into the median line, the pullback, taking us back below the 31 handle, key resistance, now support. Now it's back at resistance again. You can see that we rallied right into it yesterday, and now we're moving lower again. So the risk is for a move lower, sub 131. I'd be looking for a drop towards 2950. You got the 100-day moving average. You got the lower parallels, basic trendline support. Last month's open comes in at 2926. So sort of a sweet spot for me is near-term support for the CAD is where I'd be looking for a possible reentry in the long side. Bearish invalidation is 130, 121 still. Here's what it looks like on the 30-minute. And here's what we looked like last night. Oh, we didn't cover this last night. Okay, so it's still the same exact formation from last week, right? We came into the upper parallel that held as support. We slammed right into key support that we were looking for. Then on obviously that data that we got, that real weak GDP data last week for the US dollar, continued lower to complete 100% extension at 130.32. Still the key support zone near term. This is also the monthly open. Like I said, the rally off that region to start off the week did see a brief stint above that 131.21 level before collapsing back below. Right now, you're coming right back into support. Ideally, again, you know, that 129.40 region would be a move into that lower parallel, would complete a 1618 extension. Near-term support on a break lower 130.10 is just a 618 retracement. Now, with that said, one thing I want to say is this. On its face, it is basically an opening range for the week and month that we've just set in the last 2 days. Okay, here's your range lows to start the week and Sunday trade. Asia pushed higher. We tested that in Asia trade session, held as support, moved higher, came back. Again, this is going to be now the opening range low. If we break lower, look for that targeted play into 130.10 and 129.37, 129.45. I'm really not interested in trying to play the long side on this just yet. Dollar looks like it's still in free fall, and you know, I'm not really willing to fight this trend, at least from here. Momentum is back below 40, and even though you could get a topside pop here back towards the upper parallels, just not my preferred gauge right now. Ever since we broke that validation at 31, kind of been sitting on my hands for dollar CAD. Hey, AMD, I'm not able to actually see that chart for some reason. I'm not sure why. Did you suggest the long dollar CAD when dollar strength comes because of CAD or oil weakness relatively to other currencies? Both, Mir. I think CAD weakness is sort of the game plan. If we take a look at crude while we're at it, crude, the collapse took us below our major key target, which was right at that, right at that 4109, 4186 level. You see this? Remember this, guys? None of this chart should be very familiar to you guys. There's the break that we made yesterday. I'm now bearish below this. Next target is 138.84. In fact, this is one of the charts that have been highlighted on our radar charts for the last couple of days, right? Same exact levels. Nothing's changed. So a break below that 41 level targets the 200 DMA at 40.50, the 50% retracement at 38.84. So the 200 DMA we just took out, 140.50 or 40.50 right here. The next subsequent target's 38.84, and that's that 50% retracement down here. Coincides very nicely with the actual median line for this formation dating back to 2015. So yeah, could see a little bit of a recovery here, but inevitably looking to move lower. Now, Mir, to answer your question, this is a region of which if we base, or the 50 line, like we just talked about, the median line, I'm sorry guys, I keep mixing the two. This is the median line. The 50 line is actually the line that separates the median line from the lower and upper parallels. Okay, so when you see 50 line in my writings, I'm talking about this. When you see the median line, I'm talking about this. When you see median line parallel, I'm talking about these. But in any event, cheers, Eileen. I appreciate that. You could see a little bit of a rebound here, but you'd be looking broadly lower. So Mir, in the event where this comes into structural support, dollar drops into key support, right? Dollar CAD drops into key support. That would be from where I'd be looking for dollar CAD strength, a dollar index rebound, and oil with a little bit of a rebound as well. Does that make sense, Mir? The puzzle pieces fit pretty well with those. He says, yes, thanks. You're more than welcome. Graham says, that said, do have a nice $5 CAD divergence developing. I think you're talking about 5 minute. Let's take a look. Any second now. Okay. Yes, absolutely. Watch your timing of the day. And again, I see exactly what you're talking about. So Graham is highlighting the fact that price action is making a series of lower lows as the oscillator is making a higher low. Absolutely right. That divergence is taking shape on multiple time frames. Here's the 1 minute with momentum holding 40 essentially for the last hour since the open of New York futures trade. So yeah, looks like the downside is getting tired. Absolutely. I would like to operate on that. If you do get a probe into the monthly and weekly open, into that 50 line, or the median line rather, might be a decent stop against last Friday's low. Looking for just a near-term scalp towards the upper parallel, right? That might be a decent play. Sure. I'd be looking for the 830 print or the 930 open for that. Yeah, need a trigger. Exactly, Graham. I'm with you on that one. Might be a decent play. But just don't forget the severity of which the fall is taking place. If it does break this region, this could be a little bit more of a messy drop lower. Make sense? Okay, I'm running low on time, so I want to get everyone's question now. Graham, you're more than welcome on that. First question was from Amir on sterling yen. Amir, here's what sterling yen looks like. I have us at support right now, man, both from a Fibonacci level and structural. So here's what the daily chart looks like first. We talked about this, a basic parallel off of trendline resistance from the highs that you set back last year, 2015 in November. If you take that and just extrapolate it off the low that we made in February, you could see really nice pivots, resistance. We broke through, support. This is also the the 618 retracement of the advance from the Brexit low and former channel support, again, coming into focus here. £4 yen, sort of masked trend line no one's really paying attention to is coming off that low from 2011 and the subsequent low that you made in 2012. See where that low came in? It registered right about where that massive Brexit drop-off found support. So yes, I'm actually looking higher here. You're at support right now. I'd be looking for shifts in momentum to the upside. Momentum on the daily chart is right around that 40 level. So again, watch the close for today. Here's what the intraday chart looks like on pound yen. How many bits below the channel support would you put your stop if taking a long? I don't really like to stress longs against channel support, Ruth. I like to use it against previous price action. So even if there is channel support there, I kind of look left and I want to see a previous low or high that I can trade against. That's typically how I like to place my stops. Just because trend lines, while they are the most important thing that we're going to be following, it's a little bit subjective in the exact angle of attack. And if you're off by a little bit, I would hate to see myself get stopped out of a trade just because I wasn't exactly because I hadn't snapped the level exactly off the high. So I tend to use previous highs and lows instead. So for example, a trade like this, I'd like to have my stop against this swing low for, what is that? From the Brexit drop-off. That's a longer term, a little bit of a bigger stop there, but the ATR for pound yen is massive. So even that kind of ATR would be something I would be looking for. On the intraday chart, keep in mind, I still think you could see a probe just deeper. A 1618 extension of the decline actually takes you into 133.56. So here's the chart that we were looking at yesterday. If you guys remember in the webinar, that coincides with basic channel support. This is much more near term, right? A 30-minute chart. But just basic channeling. Actually, let me see if there's a median line in there. Ha! Not bad. Right? So I wouldn't be surprised to see this drop and complete that 1618. That's 33.56. And then that would actually give you sort of a decent trade level to trade against that low from the Brexit drop-off there, say 133.13. Does that make sense? Could you please, Ruth says yes, Amir says great, thanks. Hey, you're more than welcome, man. By the way, Amir, if this breaks 33.50, man, specifically if it takes out that stop, you could see some pretty steep declines, just to put things in perspective. Oops, where's the one? You'd be looking for like a drop into 131.70, and then that long standing trend line comes in at like 130.50. So big region of support here near term for British pound. I would definitely, thanks for bringing this up, I definitely am looking for some possible entries for the long side there. My only concern on this, Amir, is the yen. It's just so many rumors floating around on whether they will or won't, or now they're going to remove their 2-year inflation targeting outlook so that it doesn't necessarily necessitate a 2-year time span, which gives the BOJ all the time it needs. But my only concern here is the yen. That said, from a technical standpoint, 133.50 is a pretty big spot. 133.50, 133.56. Or, Amir, if this breaks above the median line, specifically above, this low, I'd be looking to buy pullbacks. But right now, I kind of need some resolution to the low. I want to see some near-term constructive price action. Keep in mind, since the start of the week, RSI, 60 hold, 60 hold. These are all things that suggest you're still trending lower. And guys, you're never going to necessarily catch the actual low. So even if you miss the initial rebound, look for that pullback to take a stop against that low. That's like my best play because you're likely to tell a lot about near-term price action when it rallies off a low. And if price action is much more constructive, momentum turns constructive, that's great. Now you got the turn in price, you're just looking for the pullback to get the proper risk to reward. All right. Nice setup here, Amir. I'll keep this one updated for you. As far as Euro pound, I don't have anything on Euro pound, but let's take a look. Hey, you're more than welcome. I appreciate that. Euro pound, Euro pound. Yeah, so here's the thing with Euro pound. Who asked for this? Was that AMD? AMD, for Euro pound, I very rarely scalp this or intraday trade this just because they're all pound pips and the range is rather small. So you really don't have that much of a cushion to put your stop. And when you eat a couple of stops, it's going to hurt, right? Because they're pound pips. So for me, I can't really say I'm excited about trading this. The only thing I can tell you is that broadly speaking, I am constructive near term. I do think you risk a move lower, or broadly speaking, longer term. I do think you risk a move lower before we continue higher. Um, and that's just based on sort of the way this thing capped out and where we are. We broke above the upper median line parallel. We made a stretch higher. But then as we kind of dilly-dallied here and it got ugly, it's been offering resistance ever since. And again, bring it into a line chart. See where the closes are. You can see once we broke back below this, now it's instant resistance, instant resistance. So I think you can move back towards that 50 line here before you start to break higher. So I can't really say I have a very clear outlook here on Euro Pound near term. All right. AMD says today's highs is 618 fib extension for the last swing overlap with the upper line pitchfork. Are you talking a near term? Well, actually, it's 100% extension works actually pretty well. And in fact, now that you've said that, I'm assuming this should be pretty cool, that the retracement is going to be just above that. Ah, yep. Good eye there, AMD. Ha, beautiful, beautiful. Yep. Could see a kickback here. Would I want to get on the short side of Euro Pound? I don't know. It's a tough call because I think Euro is probably going to dilly-dally sideways for a while, but broadly move higher. So still looking for that tag of 112.25, remember, for the euro dollar. So I don't necessarily have a very strong opinion here. I do agree with you that near-term resistance Fibonacci confluence is pretty big. Pretty big. But whether you actually get a rebound lower or you kind of just sit below it for a couple of days, I don't know, AMD. But we'll continue to track this one. Looking at the momentum signature on the near term, you did get some ongoing divergence into that high. Higher high, higher high, higher high, basically holding those highs into 70 and then a lower high does suggest that near term, you're in for a little bit of an exhaustion trade. And a break below the weekly opening range at 84.18 would certainly solidify a near-term downside bias for Euro Pound. Yeah. AMD, does that make sense? Does that help at all? Sorry, I wish I had a little bit more conviction on this for you. He says yes. Okay. So we got out of the way. Gaurav says, could you please give a simple example of how you draw Fibonacci levels? Sure can. This is going to have to be super fast because I'm late on time, but basic Fibonacci, guys, everyone tends to mix up the reference points. When you're using Fibonacci, guys, you got to go with trend. So if you're in an uptrend market and you're looking to play the pullback, you take a Fibonacci from the low to the high. A lot of people I don't know if it's accidental or on purpose, but go backwards. You don't want to take a retracement from here to here. It's just counterintuitive, right? When I've moved back into the 618, that simply means I've taken back 618 of the advance. Okay, so that's a Fibonacci retracement. You use retracements when you want to find where the market is likely to find support or resistance on a pullback within a designated range. Okay, that's where retracements come into play. Extensions come into play in trending markets. And an extension, if it's an uptrend, you're looking for a low, high, low, and then you look to play those topside objectives. I just want to see if we're actually anything interesting here. Nope. If it's in a downtrend, you want to be looking for a high, low, high, and those will give you your downside targets. Okay, we can go over Fibonacci for a whole webinar, Gaurav. So actually, if you go to Daily FX, if you go to SB Trade Desk to sources, I will be adding here a piece on Fibonacci. There's a lot of questions on that, but you can see most of the tools and your resources that we utilize are sort of broken down for you here. If you go on Gaurav on YouTube, just type in Fibonacci and my name. I'm sure you'll come up with a million different videos that we've done over on Daily FX as well. How I can share my chart with you on Twitter. You can send it over as just a photo, AMD. No problem. You can just take a snapshot of the chart and send it over if there's something you want me to take a look at. Or also feel free to just email it, info@dailyfx.com. Okay. Gaurav says, great, thanks. You're more than welcome, Gaurav. You're in the right place, man. If you have any questions like that throughout the session, just feel free to throw them out. Real quick, guys, on gold, I just do want to highlight if we close above 1355 today, it would be something big. I'd be looking for a stretch into 1380 at this point. If you guys recall, this was our near-term target. The latest round of radar charts highlighted that. Okay, as our near-term topside target, 1355 is the high day close for the year made last month. Looks like we're pushing through that right now. Keep in mind, this is trendline resistance dating back to the 2011 record highs. We barely closed above it last month. I mean, this is, even if you call this a close, right? I wouldn't even necessarily call that a close. So today's going to be important. If we do clear that level, continue to favor the upside. That was our bearish invalidation level. So we're going to continue to watch gold very closely heading into the close of the week. Also remember, major U.S. economic data will impact gold. Why? Because it's going to impact the Fed's monetary policy future outlook. And if they push out interest rate hikes further out, that's only going to be bullish for gold. Remember, as interest rate expectations move in, meaning we're expecting the Fed to hike, well, gold doesn't pay a dividend, right? And if I could put my money and earn interest on it instead of holding a hard asset, it doesn't really help the appeal of gold. And that's when gold starts to become on the back foot. The fact that we've been rallying all year long is a testament to the interest rate expectations essentially shaving off expectations for 4 hikes to now only 1, right? And you're seeing that translated in price. What are the key things I should look forward with this service other than the webinars and the charts? Is this the major thing? Ruth, I have to go, so if you can send me a note, I would appreciate that since I am relatively new. No worries, Ruth. You can see the replay here as well. Don't forget, guys, I know some of you come by way of Daily FX, you've been following me for a while. We publish daily trades on the intraday update or the swing update. So if you guys click on the swing, long-term charts, latest swing update, this is going to have your daily trades, okay? These are pending trades, or these are active trades we're currently holding, and these are pending trades. So these are orders you could just place into your platform, entry, stop, target, size. So in addition, you obviously get those 8 to 10 swing trades that we look to take on a monthly basis. Education is huge as well. You know, our goal obviously is for you to eventually not even need the service and be able to do this on your own. But I hope that answers briefly your question, Ruth, aside from all the training and all the educational resources. Graham says, never mind gold. If rates go much lower, banks ain't going to pay for holding cash. Dollar CAD just breaking downside. Yeah, it looks like we're going to get that pullback as we were looking for earlier noted. Look for 129.38. All right, guys, I'm over on time. Definitely got to run at this point. Gaurav says, what are pending trades? Pending trades are what you want to put your orders in, guys. That's what this means. Active trades are trades that are currently open. Pending trades are meaning Aussie Kiwi last night, you had an order at 104.90. That got triggered. So you're actually long Aussie Ki. Same thing with euro dollar. You got to order at 110. Stop at 110.65. Order at 111.10, excuse me. Stop at 110.65. Okay? Guys, best of luck trading. Don't forget, heading in tomorrow morning, we do get ADP right ahead of this webinar, so watch that at 8:15, and we'll pick things up shortly after at 8:30. Cheers.